If you've been trading for no matter how long, you've probably heard at some point that the more a resistance or support zone is tested, the weaker it gets, or that the more it is tested, then the more likely it is to finally break. But I've never seen anyone actually test and quantify that hypothesis to see if this is a real phenomenon. So I did exactly that, and in today's video, I'm going to show you the methodology that I used as well as my findings. And you will see that overall, in total, I tested more than 30,000 touches on 18 years of data, both on the Nasdaq futures and on gold. So the first step for me was to define what is going to be counted as a support or resistance zone. And I started with extreme swing points, basically extreme price levels that haven't been taken by either the 10 candles before or the 10 candles after. And I've marked them on the screen with those little dots, green dots for the extreme lows and purple dots for the extreme highs. So for example, we have one right here. So this is an extreme low, and I considered it as a zone. So I basically tolerated volatility around that price extreme, around 0.5 ATR, both above and below the level to mark a potential zone. So we have an extreme right here, and this is going to become a support zone. So every potential touch after that, as long as it doesn't break through the level, is going to be considered a touch of that support zone. Same thing for that price extreme here. I counted volatility both above and below, 0.5 ATR around the extreme. And so this is going to be another zone. So I'm just marking it roughly here. So this could be potentially one touch right here if price went exactly into the zone. And so on for every other price extreme. Now, a level can either hold or break. And what is going to be considered a hold is if price bounced off the level by at least 1 ATR. So a micro movement bouncing on the level wouldn't really be considered a hold, but if we have a slightly significant bounce, and I wanted 1 ATR as a threshold to be considered a bounce. So this is going to be counted as one touch that holds. But if we close beyond the level, then that's going to be considered a break. But if we dip through the level and then bounce 1 ATR without any close beyond the level, then that's going to be a hold as well. So here are the current latest support and resistance zones on gold. We had a price extreme right here at the top. We wicked through, but we didn't have any close. And price was rejected twice by more than 1 ATR from that price extreme. So this is a resistance that is still holding for now with 2 touches. We had a potential extreme here as a support, but we see that it price broke through. So this one didn't survive the first touch. We had this price extreme right here, which survived 1 touch and 2 touches here so far, and another one here where price bounced once with more than 1 ATR of bouncing distance. So this one survived the first touch. So I started with these kinds of support and resistance zones, the price extremes measured by the pivot points. This is something that is very easy for a computer to understand. But later, as I'm going to show you, I will use as well a more discretionary approach with my own ways of marking support and resistance zones, or supply and demand zones. And we're going to measure these ones as well. So what we want to know is if the more a level is touched, the more it is likely to finally break. I then used Claude connected to Upside and its tools so that it could access historical data on Nasdaq and gold futures. And we went through the methodology together, and Claude did the computations thanks to the backtesting engine from Upside. We actually built an MCP so that you can connect Upside directly to your Claude or ChatGPT and do the exact same thing. All right, so here is what I got. So here is the data on Nasdaq and gold from 2008 to 2026 on the 15-minute chart. Let me run you through the result. So on NQ, for example, when we are at the first touch of a support or resistance zone, this is where the probability of seeing a bounce is the highest, with roughly 67%. When we come to a zone and it's now the second touch, the probability is lower of seeing a bounce is lower with 58%. But look what happens after with more touches. The probability of bouncing at least 1 ATR with more and more touch is not lower than it was with fewer touches. On the third touch, the price bounces 62% of the time. With a fourth touch, roughly 60% of the time. And same again with the fifth and more touches, roughly 60% of the time. So there is no decline of the probability of observing a bounce the more touches we have. And we see the same pattern on gold. The first touch is the one with the highest bounce probability. The second touch is here also actually the lowest with 58%. And the third, fourth, fifth, and so on, they hover slightly above 62%. Now, the dotted line is also one of the most important elements of this entire experience. This is sort of a controlled group, kind of like in a drug research trial. You have to test a real drug, but you also have to test some kind of placebo drug to see if the drug is actually useful. And the conclusions you get from it are better than what you get on the placebo drug. And here, the dotted line is actually a placebo market. What we did with Claude is we shuffled the candles and different candle blocks from the data set to sort of recreate kind of a random market, which has no memory. So it's completely shuffled. You get what looks like an actual market, but it's not a real market. And what's very interesting is to see that if we also compute support and resistance zones on that fake market, the shuffled one, we get the same pattern. The first touch is the one with the highest probability of seeing a bounce, and then we see a decline right after that, but no progressive decline with the more and more touches we get. Same thing on the shuffled data set of gold. The highest probability is on the first bounce, but we also get roughly above 60% chance of bouncing with more and more touches. Now, I also tested the same methodology, but not on the 15-minute chart, but on the 1-hour chart. And the conclusion and the observations are the same. The first touch has the highest odds of producing a bounce, but then it declines after that. But the most important thing, as I said, is that the shuffled market brings the same result as the actual market. Then I actually even changed the bouncing distance required to count it as the support holding. I increased it from 1 ATR to 2 ATR. So that means we need a much bigger bounce to consider that the level is holding. And I measured again the probability of seeing a bounce with every touch. And look, the conclusion is the same. There is no conclusion whatsoever that we can say that a level holds less with the number of touches. Here on NQ, it's actually the opposite. On the third touch is where we had the highest chance of seeing the level holding. Of course, the odds are now lower. They are below 50% because we required a higher bounce to consider it as the level holding. But here, the first touch is not even the one producing the highest probability of bouncing on the real market, but on the shuffled market, it was. So that means there is actually no correlation whatsoever with the number of touches and the odds of the level producing a bounce. Here are actually the raw stats if you want to take a look at them. This is for the 15-minute chart with both the bounce 1 ATR and both the bounce 2 ATR for both NQ and gold. So you can compare the shuffled markets, which are completely fake and randomized markets, and you can tell that the pattern is the same as on the real market. And here it is for the 1-hour charts. Now, as I said earlier, I also did the same test with my own way of drawing support and resistance zones. So on gold, we would have gone from that, where here it's the price extremes, the swing points with a period of 10, to simply this, which is my own discretionary yet systematic way of identifying supply and demand zones, or support and resistance. So here are the results with my approach. And the thing we notice is that on the first touch, the odds of seeing a bounce are higher than on the previous approach with the extreme swing points. And it's the same with every other touch. Remember, it was hovering at around a 60% probability of seeing a bounce, whereas here it's always above 65%. And same thing on gold as well. It's always above here, even roughly around 70%. So that tells me that my way of identifying support and resistance zone is more relevant and more qualitative than the approach with the extreme swing points with a period of 10. But the conclusion is also here the same. There is no decay of the probability of seeing a bounce with the more touches we get. And it's the same observation with the higher bounce, now the 2 ATR. As we can see now, even the probability kind of even increased on Nasdaq with the more touches, but on gold it didn't. And the shuffled market, well, they behave also in kind of a noisy way. Now on the 1 hour chart, same thing, we get higher odds of seeing the first bounce than the approach of the swing points, but no decay again of the probability of seeing a bounce with more and more touches. All right, so I believe you get the message here and understand the whole picture. Basically, the saying that support or resistance gets weaker with the more and more touches is simply not true, because when you arrive at a support zone and you see that it's already been touched 3 times, the odds of bouncing are the same roughly as if it had already been touched 5 or more times. So my take is that you shouldn't take the number of touches into account into your own trading decision, and that's also the conclusion that Claude and I reached together. Now, what I believe could be an interesting further experiment would be to see if the deeper we get into a support zone, if the lower the odds of it holding are. Because here we measure the number of touches, but we didn't measure the penetration of the zone. Basically, if a zone gets penetrated deeper and deeper, do more resting orders get absorbed and thus potentially the zone gets weaker? That's totally another experiment that I could make and show you the findings backed by actual data as we did here. Let me know in the comments section if this is something that interests you. All right, thanks for watching. Feel free to like, comment, or subscribe. As for me, I'll see you in the next one.